Hey guys, welcome back to the Daily Exchange. I'm your host, Harry Tucker, and this is the show where every day of the week we take a look at what's going on in the world of cryptocurrency and help piece together all these moving pieces in this changing digital world. Now it's Monday the 14th of May, and making news today is that Mt. Gox releases another 8,200 Bitcoin onto the market. China announces it will publish a monthly crypto report, and Fundstrat predicts Bitcoin will be worth $36,000 by the end of 2019. So stick around because all that and more is coming up right now. Mt. Gox has rumbled again, releasing a further 8,200 Bitcoin into the market, which is worth over $7 million. The timing of past Mt. Gox moves coincided almost perfectly with major Bitcoin price drops, leading to many to speculate that the trustee sold them on the open market rather than through an OTC service, which is usually recommended for Bitcoin and crypto at such a volume. At about the time of the latest 8,000 Bitcoin, prices responded accordingly, stepping below the $9,000 mark in a few hours, now sitting at about $8,440 just about 12 hours after that. Reports that Ripple's xRapid pilot results show savings of up to 70%. According to Ripple's first pilot results for the company has found savings of between 40 and 70% compared to the typical employed foreign exchange brokers, and an average payment time of 2 minutes compared to 2 or 3 days. According to the company, an average xRapid payment took just over 2 minutes compared to today's average of 2 to 3 days when sending cross-border payments. Now, it's hard to say whether these advantages are more about the sheer inefficiency of existing systems or the benefits of Ripple in particular. An xRapid payment starts with a financial institution connecting directly to a digital asset exchange in both the origin and destination. The originating currency is then converted to Ripple's XRP, which then gets digitally transferred across the border and then converted into the destination currency at the destination exchange. Let us know what you think of this type of money exchange. Let us know in the live chat, comments, or tweet us using hashtag #TheDailyExchange. Is this the future of money? Transfer internationally using these types of service? Or do you think the likes of Swift and other bank-owned and built technologies are simply going to catch up and implement similar solutions, making the likes of Ripple redundant? Keen to know, so let us know. China announces it will publish a monthly crypto report. News.bitcoin.com has reported that according to recent press releases, Chinese authorities are set to publish regular monthly analysis of over 24 crypto assets in its Global Public Chain Asset Assessment Index. The Chinese government press release read that this independent analysis of cryptocurrencies and global public blockchain technology demonstrates the confidence of the Chinese government in the technology and will act as a guide for government, enterprise, and research institute. At a recent Asian conference, its respective technology ministries explained they are analyzing and monitoring early 30 cryptocurrencies. According to a translation from another government press release, the assets assessed must first show that it has its own independent main chain. Secondly, the public chain node can be freely created. And third, it has an open block browser, block information which can be consulted. And finally, the fifth is that to have a project homepage, the project team that people can contact. Fundstrat projects as a projected $36,000 Bitcoin price by the end of 2019. Based on the cost to mine Bitcoin, Fundstrat predicts the original cryptocurrency will rise to at least $20,000 a piece and as much as $64,000 by the year's end of 2019. The market research firm recently highlighted an analysis of the relationship between the price of Bitcoin and the break-even costs for Bitcoin miners. And the results produce a middle-of-the-road estimate of around $36,000 for the year-end 2019 Bitcoin price. To date, the price has averaged 1.8 times the PBE multiple, though Fundstrat acknowledged that a material shift in the trajectory of hash power could change the PBE support level of Bitcoin's price. In February, Fundstrat co-founder Thomas J. Lee promoted a valuation based on Bitcoin's potential share of the alternative money supply that reported a 2022 value of $125,000 per coin. As South Korea's biggest crypto exchange is under investigation for fraud. The Next Web reports that Upbit, the fourth largest cryptocurrency exchange in the world, is under investigation for charges of faking its balance sheet and deceiving investors. The exchange's office in Seoul, South Korea was recently raided by 10 investigators from the country's Financial Supervisory Service at around 10 a.m. last Friday. The investigators have reportedly seized Upbit's computers and account sheets to review the company's cryptocurrency holdings. While authorities have not yet pressed charges or released a full report of the investigation, it appears that Upbit users are withdrawing their funds from the exchange desk en masse, according to market data. Now up next, the energy sector is facing a lot of transformation. Electron is a company that hopes to apply blockchain technology to help guide the development of future infrastructure. We recently interviewed John Ferris, Electron's strategy director in Blockchain Week in London. Check it out.
Okay, I'm John Ferris, Strategy Director at Electron, and we develop blockchain systems for the energy sector. Yes, the energy sector is facing a lot of transformation, whether it's decarbonisation, decentralisation as generation moves towards the consumer, and digitisation. And there's a growing need for coordination and collaboration among the various parties. We are looking to apply blockchain to the underlying problems of the data that needs to be shared amongst those parties in order to create a platform that will allow innovation over the next 10, 20 years as the industry evolves.
Okay, and so what problems is it that you're solving that haven't yet been solved?
Well, we've got two main projects looking at two different problems. One is just the sharing of data. No one knows, no one has a complete end-to-end view of what's connected to the grid, which might sound absurd, but the way the grid has been sectioned off into different parts. There's good visibility in one area of large-scale generation. Distribution companies are finding it more challenging to understand what's connected to their networks because 5-10 years ago it was dominated by fairly homogeneous consumption, particularly at the residential level. Now there's more and more generation that's going in on the distribution networks behind the meter. There are assets behind the meter that are controllable, and a lot of the data around these assets is being held in silos, is being duplicated in ways that you don't have visibility, and people that are trying to operate and balance the network don't have visibility of the capabilities of the assets connected to the network. So one project we're working on is a platform where the owners of that data can share it. They're incentivized in a way that doesn't happen today to make sure it's accurate, and they're incentivized to share and are rewarded for sharing that data. The other platform that we're working on is flexibility trading. At the moment, the way the industry has developed, the wholesale market is traded on the transmission network where generation used to dominate. The forecasts are that over the next 5 years, the majority of generation could be on the distribution network, much closer to the consumer. And yet there's no platform, there's no market that allows the consumers to actively engage with the wholesale markets and bring flexibility. And that's needed because the increasing levels of renewable generation and the closure of the fossil fuel power stations that bring flexibility from the generation side are disappearing in order to decarbonise the network. Flexibility has to come from somewhere, and consumers can bring that flexibility if there is a pathway for them to do so. So we're developing a flexibility trading platform with a consortium of some very large and very small energy players, which is one of the great attributes of a blockchain-based platform, that it's not dominated, it's not owned by one large central party, it's not dominated by the largest. It brings this ecosystem together, and that can enable the demand side and consumers to bring flexibility to help balance the networks and to help integrate increasing levels of renewable generation on the grid.
You say that decentralization is a key part of why using a blockchain system is useful. Are there any other reasons why this is a better way to do it than what exists currently?
It's a method that mirrors what's happening at the underlying physical level, that we are seeing the decentralization of the physical world. So a decentralized digital layer matches that in a way that the decentralization of the assets is very difficult to coordinate from a centrally controlled top-down approach, which has historically been the way the industry's run. So we definitely see an opportunity to mirror both the physical and the digital worlds to help balance the system at different levels. So whether it's behind the meter, at a local level, and all of that requires coordination and collaboration, and it can't happen when you have a central incumbent counterparty that it is potentially going to hold back innovation. The industry is developing in ways that no one can foresee. In the last 5-10 years, it's changed beyond all recognition, and that's going to continue. So we need an environment where innovation can take place, where innovators are free to experiment, and in traded markets, liquidity will go to the best products, whatever they are. And anyone who thinks they know what the industry is going to look like in 5 years' time is probably going to see a few surprises.
And what stage are you at?
At the moment, we've developed proof of concept platforms. We're hosting a hackathon shortly where we've got great interest from across the industry, whether it's suppliers, generators, software developers, service providers, metering companies that are going to come and interact with our asset registration platform. And we see that as being one of the first steps of engaging and educating the industry around what they can do with an open platform that isn't currently possible the way the industry is currently structured.
Why not?
Because the open platform and open standards enables the data to be shared amongst parties. They can bring their data and can open it up to other parties and find ways to monetize that data in ways that wouldn't be possible if they held it in their own silos.
And obviously the energy sector and ownership of data are both really hot topics at the moment. Are you seeing any resistance to what you're trying to do?
We see some questions. There's certainly a lot of a concern about data privacy and how the data can be used, who can own that data. But again, we see a blockchain-based platform as being one of the solutions. And in the long term, an asset register that works across different industries can change the way the industries are regulated from a vertical industry basis to the consumer owning their data, having control over their data, and perhaps a move towards a more horizontal form of regulation where the retail side is regulated across industries, the consumer data side is regulated, and it's a way to change the way we think about data and put the consumer back.
Sorry guys, just a couple of technical difficulties with the screen there. Sorry about that. We just had a couple of technical glitches there, but we're all good now. Joining me again today is James Edwards from Finder. How you going, man?
I'm going well, thank you.
Oh, good. Well, we got like pretty massive news this
Yes.
morning. Like probably the biggest crypto news story to ever come out of Australia.
I think so.
And that is that Commonwealth Bank of Australia, the biggest bank in Australia, their CFO has just quit and is joining Block.one, which of course is the company behind EOS, which EOS is what, the fifth?
I think it's fifth
big-
by largest by market cap.
It's about 12 bill.
Something enormous.
Yeah, so pretty massive crypto. Left one of the biggest, well, the biggest bank in Australia, one of the biggest banks in the world to join this. It's a massive sign for cryptocurrency in general, especially in Australia. He's going to be based out of Hong Kong for Block One, but most of the companies from the Cayman Islands. I think there are about 200 people working for them now.
Yeah.
But yeah, what do you think this means for crypto? What is this a sign of in Australia?
Well, I think it's really exciting things for crypto to see these big talent moving across into the crypto space. Like this year with regulation, we've seen things that are really legitimizing the space and really moving the conversation away from is it a bubble to is it the next big thing? And it's these sorts of things that really do cement that point of view.
Yeah, when the chief financial officer of a bank leaves together, and he's not the first one of this caliber. What we had, what's his name? The guy for Coinbase, New York Stock Exchanges,
Was it James Radecki at all?
He was one.
Yeah, he moved across from Goldman Sachs.
Goldman
He was
Sachs,
managing director there for something like 12 years.
And then you had Eric Scrow, who was previously the head of finance at the New York Stock Exchange, has moved to Coinbase earlier in the year as well. So these massive guys that are moving across, that it's not just you're getting some junior trader that's suddenly become the head trader at some small OTC desk. Like these are legitimate executives moving across to build the next financial world.
And it really shows that's where the money is as well. You can't just grab someone from Commonwealth Bank, which again is the largest bank in Australia. You can't just bring them across without offering them something quite generous.
What do you reckon they get? Do you reckon he's paid? Do you reckon he's taken a full crypto package?
I wonder, but I also wonder if part of it is, this company's mainly incorporated in the Cayman Islands. There is no Royal Commission in the Cayman Islands. Yeah.
So. He's well free from the government's Royal Commission. But then what sort of Royal Commission-like thing is going to come into crypto? Because EOS is they're not publicly listed, but they're a fully regulated company. But again, Cayman Islands, so maybe a bit away from there. But I'm sure as we move forward, if you want to trade in certain countries and certain exchanges internationally, a private company like that is going to have to probably be registered in those countries in some way.
I think it's interesting because I think there was an obvious decision to incorporate in the Cayman Islands.
Yeah.
I know that Dan Larimer, who is the head of EOS, is an American, and he has started up two companies previously, which was Steam.it and BlockShares. So the guy is experienced at doing business in the crypto space. So I think it's one of those things that you're just going to have to watch it unfold, see how it all goes.
See what happens there. What's going on in, is it just a individual company decision for him to be in Hong Kong, or is there a reason why a lot of people be in Hong Kong? Are there regulations looser there, or is it just because it's sort of an easier spot to be close to China? And
not completely sure. When we saw China shut down, have its big clampdown on crypto, a lot of companies went to either two places. It was really Singapore or Hong Kong. So I don't know what measures are in place there, but it's obviously a space that is a good incubator for these sorts of companies. So I think that's probably there. It was probably a natural progression to move there.
Yeah. So this is the statement. I'll read you the statement that Rob how do you say Jesudason? Jesudason. Sorry, Rob. Get in there. But he said on his leaving there that blockchain will have a transformative impact on most industries in the coming years and will redefine operating models by streamlining businesses while also reducing cost and risk. Very CFO thing to want to do. He also added that the market's strong response to Block One's approach, Block One, of course, the company that owns EOS, approach has resulted in it being one of the fastest growing organizations in the world. And this will inform our operational growth strategies going forward. Now, the other thing that when you look at that as well, you look at the growth of companies like Binance as well. Mm-hmm. Binance, are they 12 months old yet?
I don't think they are.
Not even 12 months old.
I don't think they're 12 months old.
And they've got, what's their trade volume is in the hundreds of billions of dollars a month.
So if I'm correct, I think it was in Q1 of this year, Binance did more turnover than some of the big investment banks from Wall Street did.
For a company that's been around for less than 12 months. Like
Yeah.
surely that sort of stuff has, opens the eyes of these guys and the bankers, and
Everyone's going to be wanting to get in. Everyone wants a piece of that pie.
what sort of I guess, not, I want to say legitimate, but like old world businesses, what sort of executives do you think are next? Not individual executives, but from what sort of companies do you reckon would be interesting to see them move over into the crypto space next?
It's interesting because like crypto really touches on so many things. It's not just tech that they're going to be headhunting for. Obviously, there's like financial services here, which we've seen. I know that insurance is a really big one that like sees blockchain use cases as really popular. Supply chain management.
Yeah, like VeChain.
Yeah, exactly. So I think it's really not going to be confined to any one area. I think we're going to see this happen a lot, and we're going to see it expanding. And another thing that excites me, again, with today's news, is the news of Facebook actually looking into blockchain.
Yeah, so that's another good thing to look at. So now we've got these people moving over, but then what are the next companies to move over? Like, if Facebook moved over and started its own currency, or even started to accept cryptocurrencies in any way, shape, or form, it'd be kind of the first in, I guess, your big Silicon Valley tech companies to fully embrace it. Like, they're obviously all watching it. They're obviously all got teams that are closely keeping on track and seeing what the right product is to get involved with, and what they should invest in. And what do you think, if Facebook was to be the first or one of the first, what do you think they're going to get involved with?
Well, for Facebook, I think it makes a lot of sense. They try and keep everyone within their ecosystem, and they are developing an ecosystem where people are now transacting with each other. They've got the Facebook Marketplace, which is a way of, I guess, challenging eBay or Gumtrade, those sorts of websites. You've also got advertising on Facebook. If you run your own page, say you're a musician, you can also promote your content through there and you get paid things. So it makes sense for Facebook as a global company as well to swap doing business in fiat currency, which is going to be different in each place they do it, and switch to something like crypto. And whether that means using their own cryptocurrency or adopting an existing one, we don't know there. But I think it would be really interesting to see also what companies Facebook look to acquire next.
Like Coinbase, I don't know if Coinbase would ever sell or anytime soon, but they certainly seem, I guess, get a bit of Facebooky vibes in terms of something that would fit well into Facebook.
They've really got that tech entrepreneurial startup sort of culture that Facebook loves.
And they've got their payment systems already there, sort of for your like e-commerce, and they've got all that built. And so one of the things what I think could be interesting with Facebook is they've tried a couple of times now to get into, I guess, peer-to-peer payments, where you can go into, I think they've still got the service, but no one really uses it, where you can go into Messenger and split the bill and pay people
Didn't even know
directly.
I could do that.
Yeah, I don't know if it's here. I know you can definitely do it in the
Shows that it
US.
didn't take off.
Exactly. So they've been trying to get into this again to keep people in your ecosystem and to be able to pay for services over Messenger in chatbots and things like that. So if they can get that built in with a cryptocurrency, again, whether it's their own or it's an existing one, and be able to put the whole process from advertising to the customer and then transacting, bringing the customer on and leading them into the product and then finishing the transaction all within Facebook.
Yeah. Something else that I thought of is after, in the post-Cambridge Analytica Facebook world, Facebook obviously for its public image has to change at least a bit about how they deal with data and transparency. Now, one thing I was thinking, not necessarily transparency of using the blockchain. I don't know if Facebook are that brave yet. And I'm still thinking a little bit utopian here. But can you imagine if Facebook start allowing us to buy and sell our data to Facebook and to the companies that operate within
Selling
Facebook?
it directly.
Selling it directly. Tokenizing that data, attaching a currency to it, attaching ownership on the blockchain, and I actually get to decide who owns it and who uses it at the end of the day.
But then the thing with that though, if they can do it now and they don't need to do it and they can take all the money, why are they going to split the money with you?
Like I said, I'm operating my utopian bubble right now. But there are networks that are coming out that are saying they're going to do stuff like this. I've already seen a coin that does like a decentralized Facebook where you own your data and you get to choose when you sell it. Facebook do have the lion's share, but as we know, no one company sits there forever. We saw how MySpace came and went. We've seen how all sorts of different messaging applications come and go. Facebook are there, but maybe they do need to adapt at some point.
Yeah. I think it's interesting with all that you talk about adoption and what companies are going to be the ones that get left behind?
Yeah,
Like that's you talk about companies that they're in their monopoly phase, but they just keep being good at what they do now without pushing above. Like there was sort of, I guess Microsoft for a few years there were sort of lost the magic or whatever. Sort of at the end of the Bill Gates years and the end of Steve Ballmer years, and the last few years they've come back and resurged as they've innovated quickly on new technologies. But there've been a lot of companies that have just disappeared as a result.
I can think of Nokia as another great example. They failed to catch up with the smartphone craze. You had Kodak. Would have been the market leading share for what, 30, 40 years, something enormous, and then boom, to almost to zero.
Are we going to see this one? Is the idea of being, I guess, there's a lot of these blockchains coming with the idea of, especially like Ethereum, like the decentralized internet, and we have things. If we go through things like decentralized storage and things like that, it's very, I feel like very Pied Piper, Silicon Valley, but it's what some of them people are trying to do. Are we going to see these massive cloud storage companies be the next thing to disappear? Like, what does that mean to, I guess, Amazon Web Services is their most profitable part of their business, and it subsidizes a lot of the company. What if, I'm not saying anytime soon we're going to see Amazon Web Service disappear because it's a beast on its own, but when it gets to this point when decentralized storage and decentralized apps are more of a thing, how are these, do you think they're going to be able to adapt quick enough?
I was actually having this conversation on the weekend with someone. They do security for AWS. And I was talking to them about, you're doing security for AWS now, but when we enter this period of distributed file storage, we won't need those same security requirements. And I wasn't saying go find a new job, but I was saying you better catch up because things are going to change and the security requirements are really going to shift.
Yeah. And then it's what does it also mean for things like we move to the sharing economy? Why do you have to use things like Uber, and why can't we go on? They're going to be decentralized marketplaces where you can offer your services and you can see your the driver's rating through the blockchain and the transparency through reviews, and you don't have to worry about Uber controlling things like that.
Yeah.
It's just such a number of businesses. While we think the mobile phones disrupted all these things in the last, or the smartphone, sorry, has disrupted these things in the last 10 years. This is the next smartphone in the things that it's going to disrupt.
And I mean, to take back to where the conversation started, this is why you're seeing people like the CFO of Combank move across.
Exactly.
They know that the change is coming, they know that it's happening, and it's now.
It's very exciting. But thanks for joining us today, James.
Thank you
See
again.
you, James. We'll be back on Thursday, so we'll see you then.
See you then.
Cheers. Up next, we're going to talk to you about Bitcoin's price, see where it's at this week, and what sort of indicators we should all be looking at for this week's price. Now, it's going to be a big week for Bitcoin because this week is Consensus Week, or New York Blockchain Week. And on New York Blockchain Week and Consensus, which is probably the biggest crypto conference of the year, big news drops. And when big news drops in the crypto space, prices can move a lot. But first, if we take a look at the price support at the moment for Bitcoin, in the past week, there was a sharp bearish reaction from the $9,500 pivot level in Bitcoin price against the US dollar. The price declined sharply and then moved below the $9,000 level, support level, and the $8,500 support level. The decline was such that the price traded towards the $8,200 level if we move down towards this space here at the bottom. It also broke a connecting bullish trend line at $9,000. A low was formed at 8,226, back down here, before buyers appeared again. Later, the price started consolidating losses above 8,200 and is now stable around this mark here. It tested the 23.6% Fibonacci retracement level of the last decline from the $9,479 high, which was this blue line up here, and to the $8,226 low back down at the bottom of the level here. And it seems like the price is finding it hard to move above that $8,500 level. It's currently sitting slightly below that now and above the 50% Fib retracement line. From the $9,479 high to the $8,226 low is at $8,850. This is the midway point in the Fib retracement level. There's also a significant bearish trend line forming resistance at $8,900 on the 4-hour charts of the Bitcoin and US dollar pair. Therefore, the price is likely to face sellers near the $8,500 mark and $8,900 levels back up here. Once there is proper close above $8,900 and $9,000, there could be more gains back up towards the $9,500 mark. Looking at the price, the current price action is slightly bearish below $8,900. On the downside, the $8,200 level is a decent support, followed by $8,000. If Bitcoin falls to hold 8,000, it could decline above 7,500. Now, if we look at the technical indicators for the next few days, the 4-hour MACD for Bitcoin is about to move into the bullish zone. The 4-hour relative strength index is well above the 50 level. Major support level is at 8,200, and the major resistance level is back up at $8,900. That is it for the technicals today. Now let's take a look at what's going on in the social world, what is making the community tick, and what might affect your investment levels and your trading levels here. Now on Reddit, we take a look at what is making the community tick. Biggest one, of course, is Facebook. We just talked about. Facebook is looking to work on its own cryptocurrency. However, Facebook banned crypto advertising not too long ago, so many in the community are calling out as hypocrites. And why are they? If we look in the comment section and see what people are saying here. Let's be honest though, the only cryptos that need to advertise were exactly the cryptos no one should buy. So while there's been a bit of support with 5,000 Reddit points pumping that up to the top of crypto, Reddit crypto, there are people with some rationale saying that, and this is true, I believe that Facebook blocking the crypto ads was a good thing. There were I would see so many people in my feed basically getting on there and shilling these shitcoins that were just basically scams, weren't going anywhere, and they simply found the white paper and the coin with the promise to get rich on Facebook. Consensus, which is of course this week's, people want to make it trending to get the news out there. There's not much that's come out of Consensus just yet because it's just starting to get going, but over the next few days we will see a lot of news out of Consensus, which is the biggest crypto event of the year. More Consensus, scam exchange, coinexchange.io, bit of a scam warning there. Tell your friends, don't use coinchange.io. Changely should be boycotted. Why does this person think Changely should be boycotted? Changely, so it's talking about, I've seen a few of these. So Changely essentially is it's more of a brokerage than an exchange, when you literally just, with a couple of clicks, can exchange your crypto for another crypto, or you can buy it on your debit card with fiat and then exchange it as well. But there's been a few problems with it. Number one is that they pretty much limit you to exorbitant exchange rates where they make a lot of money but claim it's no fees or little fees or whatever they claim. And then the other thing is that there's been times when they've basically just held funds from people and then taken weeks to release it. And it's not just one or two, there's been quite a few. So it's something to be wary of, not say boycott them, but it's just something to consider. There have been a few problems with other people in the past. We talked about just before about CFO of Commonwealth Bank joining EOS. That's starting to get some trending movement. It was only really just announced here just before we went on air. So I expect that to move up and reach the top of this thread pretty soon. And tonight's episode of Silicon Valley, you can track the Pied Piper coin on Delta. So someone created a fake Pied Piper coin. The Pied Piper coin is the the coin on the show has no real value, but someone created it at 7 cents, which is the value it listed for on the show, and people have been playing with it all week. And last week we talked about Australia banning cash purchases over $10,000 starting in July next year. People are taking that as another big win for crypto. So there's been a few different Australian. Here's another one. Australian government budget injects $700,000 in blockchain research. So a bit of Australian news making the world crypto community. But yeah, so that's sort of it that's ticking the community today. But I expect, like I said, there's going to be a lot of news coming out this week from Consensus. So we'll keep an eye on the community side of it and what's going to make the news there. Up next, we got some questions. With the first one from a viewer who asked, can I buy Dentacoin with US dollars using a debit card or a bank transfer? Firstly, Dentacoin, okay. Dentacoin is an interesting one. It's meant to be the dentist, the dentist coin, where you pay for your dentistry with crypto. And I kind of don't really know why it's needed. Again, personal opinion, if you find a good reason to do it. But I don't think you can actually buy it with a debit card. None of the major exchanges that are doing it over a debit card seem to list it or directly with a bank. Actually, in Australia, I wonder if I'll tell you a quick look. If CoinSpot's listing it, because you might be able to get ripped off with the exchange rate, but if you really want to buy it, let's see if they got it. CoinSpot, Dentacoin. Nah. CoinSpot, you don't have Dentacoin. So I definitely know we're in Australia. You can't find anywhere overseas either. Maybe if there's like nowhere. Sorry. You can't buy it anywhere with that. But what you'll have to do is basically, if you want to buy it with your bank transfer or debit card, go buy Bitcoin on, like CoinSpot in Australia, BTC Markets, Coinbase, and then transfer your crypto to an exchange with Dentacoin. But one thing I'll just say, some warning with coins like that, is really look at the use case for it. Is can that industry and can that product exist without its own cryptocurrency? If it can, yes, it's usually not that sound of an investment. And again, follow your own advice and do what you want, but it's just kind of something that a lot of people, a lot of analysts and experts in the crypto industry say to look at is basically, does this coin need to exist? If not, probably not a sound investment. Next question asks, are we still seeing Mt. Gox trades affecting the overall market? Also from a viewer from last week. Yeah, so we just saw this morning the $8,200 that was dumped onto the market. Prices were about $9,000. Now we've dumped down to about $8,400 since. And basically, it's sort of, I guess, how we're trading right now, there's only a certain amount of coins that are on the exchanges, and people are basing their prices on the volume that is on the exchanges. And when another $8,200 gets dumped onto there, it dilutes everyone's prices on there. And the other thing to remember, which I think people forget as well, is that there's a lot of coins that are traded on OTC desks that aren't being accounted for on exchanges in an exchange volume. So don't always, so it's interesting to see that people potentially overreact in those situations when Mt. Gox coins get dumped, particularly when there's so many. There's thousands of coins and trades done like that on a daily basis across the world. But yes, to answer your question, it does still affect the price. We saw it in the last 24 hours, and it probably will still continue to affect the price when they do further dumps. But it could just be a good time to trade. So keep that in mind as well. But that brings us to the end of today's show. If you have any questions about crypto, currencies, or just trying to make sense of it all, let us know using hashtag The Daily Exchange on Twitter, leaving a comment down below, or jump onto our Telegram chat, which is Crypto Finder TV. And let's have a chat. Let's talk about crypto. Hear your questions. I'm on there. James is on there. There's quite a few of us on there now. So keen to hear about anything that's caught your attention in the last few days and any exciting coins you've heard about or anything like that. Also check out finder.com for more crypto news, and check out our other videos on our YouTube channel for even more up-to-the-second information on everything crypto and blockchain related. But that's it for today. I'm your host, Harry Tucker. Thank you for watching, and we'll see you at the same time tomorrow.